Hello, everyone. I want to thank you for joining me today for Challenging Traditional Practices, Life Insurance-Based Products, or IBSs, for the affluent client. My name's Scott McVicker. I'm a CPA and a CFP, and first off, I want to thank you for taking a couple of minutes out of your day to watch this video, and I hope that the next 5 minutes leave you fired up. I started my career in 1988 as a tax specialist at one of the big six accounting firms. And I've spent the bulk of my career in financial services developing kind of a niche expertise in the tax and financial advantages of insurance-based products, or IBSs as I call them, specifically life insurance and annuities. In fact, one of my former peers used to refer to me as the CPA who loves life insurance, which may sound like a paradox given the perspectives of most CPAs in terms of insurance-based products, but I digress. For the past decade, I've been teaching AUM-based advisors, assets under management-based advisors, and CPAs and other financial experts how to simply and effectively position insurance-based products, or again, IBSs as I call them, with their affluent clients. And having worked with so many advisors, I have gained a lot of insight into the challenges and the implications that financial advisors like yourself face in today's world. And using that insight and experience, I've built a turnkey system called the iCorp methodology that generates improved client financial stability and client relationships while substantially increasing your revenues, and all with minimal impact to your current business operations. That may sound too good to be true, but I promise you it's not, because we have done just that for other FAs like yourself. Now, this approach will demonstrate clearly and substantively that insurance-based products used in conjunction with, not in lieu of or in place of, but in conjunction with traditional investment strategies, that it will provide significant benefit to your clients, actually improving their capital performance in certain economic conditions, conditions, by the way, that have and will happen again. Now, many high net worth clients that we work with are business owners and they're entrepreneurs. And by evaluating capital from more of a business perspective, the iCorp method becomes the catalyst for a more objective, less emotional approach, essentially looking at their capital like a balance sheet approach. And yeah, that's my CPA hat going full steam there. Using a turnkey approach that's based on three distinct client profiles that encompass, by the way, all of your existing clients, I'm going to show you how a small, minimally impacting annual repositioning strategy of 1 to 3% of targeted client capital can actually insulate virtually all of their capital from what I call the perfect storm, and at the same time generating an additional $250,000 to $750,000 of additional annual income for every $25 million of assets under management. In other words, I'm going to show you how to double your revenue without adding a single new client or putting additional burden on your already limited practice resources, all while increasing your client's peace of mind substantially. Now, a quick little background. Now, here's the cool part. The iCorp story-driven scripted approach literally can be mastered with minimal effort on your part. The heavy lifting's already been done. The results have been proven. Think of it like a child's bedtime story. Once upon a time, I'm guessing you learned The Three Little Pigs, and to this day, you could tell that story with the passion it deserves and without a book in front of you. Well, iCorp has authored The Three Little Pigs of insurance-based strategies, and it's all you need to have confidence delivering a compelling story to all three of your clients, Mr. and Mrs. Heath, Rand, and Newt. Heath is a high earner, accumulating through hard work. Think business owner, think entrepreneur, think paying lots of income taxes, making good money, still has discretionary capital after funding qualified plans, and we have some great strategies for that client profile. Mr. and Mrs. Rand, probably my favorite. They're retired and their assets need defense. You could see a couple in their mid 60s with $2-3 million thinking that they're financially secure, but if they're not properly positioned to defend against the perfect storms that are out there waiting, they literally could lose their financial security in the blink of an eye. And then Mr. and Mrs. Newt, the navigating efficient wealth transfer. Well, if you don't think that the estate tax thresholds are going to come back down at some point, probably before 2025 when the current ones sunset, I would disagree with you. And at the end of the day, we have lots of clients that have asset bases that exceed thresholds where they're going to pay transfer taxes generationally, whether it's estate taxes, loss and step up of basis, capital gains, etc. Now, all three of these clients have something in common, and which is an unawareness of the potential implications to their financial security from these perfect storms, which we talk a lot about in our course content. Now, the perfect storm, it's not a matter of if, it's a matter of when and who. Some clients will dodge it. They'll dodge it by good luck, by fortuitous timing that they didn't plan or intend. They'll just get lucky. But others won't. You can help shore up their assets and kind of take their straw and wood houses, reinforce them with the bricks of the iCorp proprietary discretionary reserve account, which is the big, strong brother of the IRA. But first you have to get on board. Now, obviously, it's not like I, or anyone for that matter, can say for absolute certainty which of your clients is going to incur a perfect storm. The only thing I really know is that there's only two general flavors of financial future for our clients. There's hunky-dory-ish like circumstances, and then there's perfect storm-like circumstances. Now, hunky-dory, everything's good. Assets go up, taxes are low, nothing really major happens. The flip side is that in a perfect storm scenario, lots of bad things can happen at the same time, and that can be problematic for our clients. Think simultaneous occurrence of independent variables, macro variables like market corrections, micro variables specific to each client, maybe a healthcare scenario, a tax situation, longevity, divorce, lawsuits, creditors, lots of examples. What I do know is that relative to the perfect storm type of environment, it has happened countless times before, and history always repeats. Another way to look at this might be to think of the Marvel Cinematic Universe. It's the multiverse. We have a couple of different alternate realities here, either one of which could come to pass for any one of our clients. We have hunky-dory, which is everything's hunky-dory-ish. Assets are going up, taxes are relatively low, nothing really major bad happens, hunky-dory. But then on the flip side, we've got the perfect storm, where simultaneous occurrence of independent events that are adverse can have disastrous effects on our client's capital, especially when they don't have the discretionary reserve account, the brick house. And it literally can be an eye-opening, shocking result. I want you to think once upon a time, Millionaires Next Door, where husband went into nursing home after a big market decline because he couldn't deal with the stress and had a stroke, and widow lives on for a long time, assets are chopped in half, still spending money after funding the retirement or the nursing home rather out of pocket, and you literally see that asset base decimated over that period of time. It's not conjecture, it's already happened, and it's going to happen again. It's a matter of who, when, and how. Does anybody remember Japan? 1989, Nikkei hit 42,000. It dropped to 7,000 in the span of, I think, 4 or 5 years. And it kind of treaded water and barely crawled its way back halfway over the next 15 years. Think of the implications to that kind of an event, to your client's capital, and to your practice for that matter. Does that mean it's going to happen here? I don't know. Could it? Absolutely. I saw it happen personally in my own case with my grandmother. She went into a nursing home right after 9/11. Her assets were down 50% because of the markets, funded 6 years of private pay nursing home care, and a once millionaire next door died without a penny to her name, and it didn't need to happen. Back to the story. When you think about it in the real world, corporations have CEOs who are, well, they're paid well to take actions and make decisions to best achieve the company's objectives. They have the responsibility, perhaps duty is a better word, to consider all the what ifs and then take the appropriate steps to avoid disastrous results like we're talking about. And what happens to CEOs who ignore relevant info and then fail to take the right actions and make the right decisions? They get fired. Fact. There is a way to insulate clients from their perfect storms should it hit, but if it doesn't, without significantly impacting the hunky-dory alternate reality. So who's the CEO of your client's capital base? These aren't scare tactics, it's just math, and math doesn't lie. Stick around, we'll show you the math. So what's the solution? The solution is the iCorp system, which includes everything you need to quickly and efficiently incorporate it into your practice, and it's based on the iCorp exclusive Heath Rand Newt storyboards and the proprietary discretionary reserve account, aka that brick house for your client's capital. And the scripted approach, which again can be mastered with minimal effort, it's been perfected to effectively challenge existing mindsets using our CEO mindset analogy and comparing the status quo results with substantive methods using familiar stories and language familiar to the client. Ultimately, and most importantly, it's absent of the salesy gimmicks that the affluent client is used to from the insurance industry. Now, all of this is packaged into a system that includes everything you need, including client presentations, scripts, generic conceptual content to set the state, and most of all, access to substantial training materials, including videos, webinars, mock live client presentations, etc. First and foremost, thanks for taking a couple of minutes of your valuable time out of your day to watch this video. I hope you gained a little bit of new insight. I hope you leave a little fired up. And I want to leave with a couple of key points. That first and foremost, major one, understand that somebody's going to talk to your clients about life insurance. Not a matter of if, it's a matter of who. And I know that you're tired and unenthusiastic about the traditional industry sales approaches. And the reality is, well, they really don't work that well anymore anyway. Meanwhile, 100% of your AUM-based revenue is at risk of significant, uncontrollable, and unpredictable impact from market volatility. Can you imagine taking an 85% cut to your paycheck next year, like in 1989 when the Japanese market corrected massively and took, I think, 20 years to crawl its way back to not even halfway where it once was? But the real rubber meets the road. That issue is back to the math that doesn't lie. When you apply common, familiar metrics and comparisons to status quo scenarios without IBPs in a perfect storm environment, your clients are at risk of subpar performance that can have potentially devastating consequences. And I ask you, do you want them to learn that from somebody else? Or do you want to be proactive? Help your client put on the CEO hat. Help them make CEO-like decisions using the iCorp system that tells compelling stories about strategies that can significantly improve their financial security and stability. The fact that this can increase your practice's revenues significantly and efficiently while providing you some measure of diversification, well, that's the icing. And I just said diversification. That's a key element of our approach with all of our clients. But what about you? Reoccurring AUM-based revenue is awesome and completely at the mercy of the markets. Click below to register for our 30-minute comprehensive review of the iCorp system. You'll gain valuable information, all of what you need to make an informed decision on whether this approach is synergistic with how you approach managing your client's capital. I promise you at the very least, you'll gain some additional insights. I want to thank you for watching and take good care.